Hello and welcome again to Stocks Advisor channel. In today's episode, we will talk about Palantir Technologies Incorporated, traded at New York Stock Exchange, ticker name PLTR. Well, a PLTR is very interesting technically speaking. Also, of course, it did this enormous growth you can see in the period starting from November to December of previous year. And from that moment on, the price was really volatile on the higher channels, in general between 20 and 35. So if you look more carefully here, it's very interesting because we have two clear patterns formed. So originally we had in let's say November-December action. If you look carefully here, we had a classical triangle that resolved positively, and in actually mid of January, by end of January closer, we had this very nice growth, and then the price decline started. So triangle was confirmed, it played well, and then in general we started to decline. So we saw this declining channel formed, so you can actually see it here clearly. This was a little bit longer channel, but what happened then, and this is also very remarkable actually, you see that at certain moment, actually the level of where the previous triangle was forming, and at this level we had kind of a major rebounds, and now looks like we are on the uptrend, because you can seems like forming it here, but still the question is, will it be confirmed or not? Because today indeed we had a very nice price action. It was 8.89% plus, finishing with 25.42. After hours we are slightly in minus, but this is still within the volatility range, so it doesn't matter. You can say it's a draw after hours. So everyone is preparing for possible rebounds. Also, if you see RSI is going higher, it's tending to oversold area, and this would mean also that the price should go high. The volume is gradually increasing. MACD is on its upwards wave, so it doesn't look like the wave is still finished, meaning that until it's stopping, until we have the maximum, it still might go high. So it's a very positive momentum, but also we need to keep in mind that it could be cancelled any moment, and we could have a little bit further volatility. I wouldn't say we will go anywhere lower here, because in general these trading levels are quite stable, but we might have some volatilities here. And overall, it's expected to be between actually these two major levels. It's the level of 1985 and actually about 2992, which makes a very nice broad channel to trade within, and actually we can exploit it for our let's say use and for making the profit. So let's look closer to the chart, and let's analyze how we can trade here. This is overall very nice in general, because as I said, it is supported by previously formed triangle, and this slight descending channel, quite big of course in relative numbers, more than 2 times, but it is within the general volatility range. Let's say, of course, it's still from 40 to all the way to 50% decline, but it is within the volatilities, because the volatilities are quite high, within the volatilities of previous triangle here. So with this being said, how to trade, how can we actually make our play? It's very simple in a sense that we can just start buying in the very first as a very first entry already inside of this candle, because hoping that this dark line, let's name it T1, hoping that this T1 will be confirmed as the new trend. So if this is going to happen, we need to be in time there. Therefore, we can already actually start buying. So let's put those levels here. Also very nicely formed historically. The lower level will be 23.68 and the higher 25.78. So let's write it here, 23.68, 25.78. This will be our first level to enter, and actually then from there on we can wait and take the profit. So it's actually immediately activated level. If we open a little bit lower, then today's high, we can just start entering and buying here. And again, about profit taking, usually we advise 10 to 15% at our channel because this one is extremely fastly moving. It's advised to play, and that's also how we would do with our team. It's profit taking from 15 to 20%. Once you do it, once you have it, take it, enjoy. If needed, re-enter. You can also find other opportunities. There are also other videos, let's say, that you can find at our channel, so you can always find something else, but it's really important to take your profit once you have it. Don't try to become rich from one trade. This is usually not possible. It's a major mistake that beginners trade. There's also actually very professional traders do sometimes. They are dragged by their emotions, by hope of further profit taking, but then usually what happens, it might expire, the position might expire, it could go negative, and then you are out of your funds to average down even, so it could be very dramatic experience. So take your profit in time, re-enter if you need it, check other opportunities if you like. Also at our channel you can find many. Otherwise, do it nice and steady. So with this being said, this is the first channel. What should happen if we have a decline of T1? This is also possible. Then we might go lower all the way to the level of around 20, so 1992. Let's again look at in the magnification here. Why this level? Because it worked really nice as an activator of the previous triangle, but also it worked strongly here by actually beginning of March. You can see that in this area we had a very nice also support level, so let's indicate it here with an arrow. So you can see it worked as a very strong support level here, and also it was actually the activator for our triangle here by November. So this is very strong level, and if price declines, we can just buy there immediately with giving it a little bit margin for possible piercing lower, which will be also coinciding with this very nice area at 18.14. So let's put it here, therefore. So it will be between 18.14 and 19.85. Let's write it here. 18.14, 19.85. So this will be our second area to buy, still, let's say, within the technical expectation, but if the T1 trend line is not confirmed and we are going back and actually still reconfirming this descending gray channel that we depicted, so it would mean that we actually will continue a little bit further with this channel. So these are two technical levels. Now what would happen if we have catalysts coming with the company or with in general the technological sector that it's working in? There could be many reasons for that. It's not only company related, it's in general what we call a negative catalyst. So if negative catalyst kicks in, you need to be prepared for action. Usually if you are purely technical trading person, and that's why we don't completely follow only technical part, that's the risk. So news are risk for you because you never know how to play on those, how to anticipate. But at our channel we do so-called mixed analysis. We name it, it's based on 3 pillars. One is actually technical analysis, second one is non-linear averaging down based on technical analysis and resist support levels, and the third one is taking into account and mitigating possible risks due to negative catalysts. Simply speaking, it just means we need to keep some funds to buy at the very principal levels, historical levels up to half a year ago, where we can, if negative catalyst kicks in, we can enter, and because we do it non-linearly, so we buy with more funds, with let's say mathematically reasoned levels, it means that once the rebound takes place, we can still exit with profit, or at least with the draw, with a minimal loss. So we are okay to spend a little bit more time, but still we let's say tune our trading for profit and no losses at all, or with minimal losses, let's say it that way. So with this being said, let's look what would be the principal level to buy here if a negative catalyst kicks in. And if we do so, of course, you can see this is just in the area of below this inflection point that was taking place in November. So let's indicate it here with an arrow. You can see here it was a very nice moment when the price was forming for next leg up, and if we will go lower, this would be very principal levels for us to buy, and the lower part of it will be, of course, here. So with this being said, it will be between 13.18 and 14.94. So 13.18, 14.94. So this will be our third level to buy, and this is purely to mitigate negative catalyst. So it's not at all we predict that level. This is very important to understand. It's not a prediction of the level. This is just risk mitigation, and risk mitigation means that we just want to keep some funds there to play to make sure we are not exiting with losses. And with this being said, so these are 3 levels to buy with a profit target 15-20%, and how to buy, because these are still 3 levels. We advise, again, classical here, 5 portions. So it means that you can buy with 1 portion in the first channel, then with 2 portions in the second channel, and again with 2 portions in the third channel if negative catalyst kicks in. So this would make you the best optimization for profit versus losses, and actually should be quite safe trade for Palantir Technologies. With this being said, that's actually all for Palantir Technologies at the moment. Good luck with it. We'll be also following it later. Quite nice stock overall. If you know what's happening, if you know how to enter, how to exit, could be really good profit making here as well. So good luck with it. Don't forget to subscribe to our channel if you're first time watching this video. Press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks.